This is Justin AMZN on Tuesday, October 23rd, 2018. And today we've got quite a bit of a sell-off. Pre-market, we actually were making somewhat of a triangle here with support right about 1751 and this down angle really right along the 21 exponential on the 5-minute. And then it broke down, looked like it was bouncing, just retesting back to that low, and then broke down even more. Right here, right before open, it looks like it's going to try to come back up to the 1747 price. And so getting into the day here, and because we hadn't made it down this far the last couple of days, this is, and yesterday was a bullish candle, this is a bearish gap go. And we're taking out lows in here. And it really could keep on moving down into the 1600s like I was talking about yesterday. Immediately, we've got a candle that touches 1747 and sells off all the way down to 1726.16. It just completely dropped. It actually touched both of the lines in here. And I didn't go look at the 1 minute to see. Maybe we can go do that towards the end of this video. But it's really interesting to see if it actually, jogged up a little bit to 1747 to continue that retest and then sold off and then recovered, or if it dropped and then recovered up to 1747 and then came back and closed just slightly below at 1745. So kind of curious which way that went. I like it. I hope that it went up first, but obviously it didn't have to. But a really large candle to start out with a really high volume, just like 2 days ago or Friday, where we had a really large bearish candle opening up the day, and then an inside candle, and then a move up. Yesterday we had a really small candle and a move down. Today we have a really big bullish candle, and we make a little bit of a higher high. This one through an upper wick past our line. Just some sideways consolidation here, about 25 minutes of sideways, and then breaks down and pushes right on past this line. The next line is only a little bit down, a little bit further down at, I think it's 1714.50. So we wicked into that one. It looks like we're bouncing here. Again, another stair step, just a consolidation here between these lines, but we've already interacted with 3 lines. So we've gotten out of no man's land, and we're down below it now. So that's really interesting that we've moved down some, and there's still some support in here. So, I mean, the fact that we've sold off to this, a week or so ago, we were actually below this into the 1600s. I think I'd have to go look at the price again, see where we actually got down to. But, in here, it's just consolidating. It's really range bound by these lines. And so you could really set this up, just like you could have been buying here and selling here. That would have worked. You could have been selling here and buying back here. In between these two, it's a much smaller range, but you could have been selling here and buying here, or buying here and selling here, or waiting for it to move up, buy a breakout here and a stop down here. And that would work too. Retest, it comes back down, but it continues on back up. Here you go. Here's a retest. So here's the quick retest that came back down through it. Another retest coming right down in it. You could be buying here and a stop, down, maybe enter at 1727 and a stop down at 1720. That's a $7 risk. Squeeze starting to form. That make you a little nervous, but doesn't quite come back as far as 1720. So you're down a little bit, but continue to pull back, and then it bounced. Squeeze still forming, and this is really nice. Sort of an inside candle, a little bit of a pennant here with these 3 candles, and the squeeze still forming, and then the squeeze firing and moving it up. And that would have been a nice trade up to this high. Take out, either take out some profit here or here, and then look for a continuation or a pause around 1750, 1747. In this case, it actually pulled back down. So maybe you would tighten up a stop and we're stopped out or trailed out for a little bit of a gain on the overall position. Or, if your stop was here, maybe you moved it here. And now that these candles are forming, maybe you want to get it up here so you're break even. And looks like that would have been helpful because you probably would have been wicked out right here. So going sideways, pulls back a little bit more. Okay. Comes back here, some nice small candles. It'd be nice for it to touch the 1727 price again. That was 1727.80. And then if it pulls back to here, you could be buying here again, the stop a few dollars away below. And okay, it didn't come back down, but it has another wave higher. So what I'm seeing now is we've got this push higher. This is almost like a 1, 2, 3, 4, 5. Not sure where 5 is going to end, but kind of like a wave pattern like that. Some real clear sell-off here, some choppy sell-off here, a little more of a triangle shape here, which is typical of a wave 4. And, the wave 3, had the most aggressive move, well, more aggressive than wave 1, but now it looks like this wave 5 is having a really strong move. We've made a higher high than the wave 3's high, so it could pause here at any point. We pushed above the opening high a little bit, sold off from that. Now we pushed above both those highs. We could just sell back down to 1750 again, or 1747 again. And no, it looks like it's going to continue on up. And I don't know if that showed up for everybody in the video, but I need to plug this thing in. So we're going to hurry up through the video. So we just moved on up and went sideways. If we're looking at options, let me see how much battery life I've got. Hang on. All right, I got battery, no problem. All right. We moved on up and just, plugged away going higher. We actually retested back down here almost to those highs, or this one at least. Retesting kind of this triangle. Definitely came into that triangle range with this wick here and sold off from that. So that would have been a really nice bearish move with the pre-market setup. Let's see what this candle does on the put. So that is at 835, and you've been ready to buy at a low on the 835 candle. That would have been the put. We were looking at the 1700 or 1750. So not really anything telling you, yeah, buy this put at this price, other than it got into that range. But I mean, it made it moved up. So here, this is previous day, and way down here, down in the 25 range. Now we open up today at 43.27. So if anybody had held on to puts overnight, you were massively profitable. And something I should have mentioned when I was looking at the daily is these two candles. Remember, these two candles looked really a lot like these two candles. The very next day was a gap down. And I talked about it selling off, but I should have been talking about a gap down and a buy back up, and that's what we had today. It just gapped down further than I expected. It turned into a bearish gap and go, which this one didn't. This one opened pretty even with the previous day. Actually, what was that open? 1358.24, and the low 13. Yeah, so 1358. We were above the low on this and above the low on this. Today we opened at 1742.24, and we were below the lows of both the last 2 days. So that's pretty clear that we had this pattern gap down from it, had this pattern gap down from it, but we bought up. Today we sold off and then bought up. So a little bit different. Again, it's not identical to this pullback here, but there's definitely some similarities. We were back up into the 5 exponential, really close to that by the close on this day, and we're touching it again right here this day. We're just looking a little more bearish, just these lower high candles, and these were more or less even on the highs. So just something to keep an eye on, a little more bearishness. But today was a nice bullish candle. After you had some of this sell-off, then it bounced. If we come back into that put, had somebody been buying here, I mean, the only thing you could really do is if you saw this low here at 41, and then wanted to set up $100 risk, maybe $200 risk, and try to get a stop at 40 and buy at 42, but you would not have been filled on the next candle or next couple candles. Would have been a nice attempt to buy there. But I mean, with this being earnings week, would have had a little bit of a larger R to play with to make this kind of stuff work. Or you're going out further. So if we go look at 1675, very little volume, not even worth it. 1650, okay, a little more volume here. Let's see what this is doing. The open was, or sorry, the low and the open were 24.70, and then the next candle's low was 24.15. So that's within $100. Trying to get in, at 25 and a stop down at 24. That could have worked possibly, and then that would have rallied nicely. But that general indication is buying $1 less than that open price or something like that, or $2 less. That would have been a nice rally. Probably would have been taking a little bit of profit up at 28. Had you bought at 25 by 24, getting out at 28 or some of the position would have been nice. And then it ran all the way up into like 36. But this candle would have been the one. So this is 915. The 915 candle should be this one. Yep, 915 was this one where we came down and touched that line. So probably would have been taking some profit on the 9 o'clock candle that actually came down to this line and then continued. So the 9 o'clock candle was this one. Probably would have been exiting at like conservatively 30, maybe 32 as it crossed it. So that's buying at 25, stop at 24, selling at 32. That's a nice gain. That's a 7-hour gain. So, but again, you would have had to be looking at this option, getting it set up. It's possible. And I hope, some of us, looking at this and studying this every day are doing that. The other thing we can be doing down here is buying. So we're going to look at the calls down here at the 915 candle. So at 915, I put in a low of 1520. So I'm looking at the 1850 call. So I'm pretty far away from the call, but there was some good volume in here we were looking at yesterday. Again, the price from yesterday on this, we were up at 34 and gapped way down. What's really interesting on the 1850 options today is, had you been looking for a buy off of that line, maybe you bought at 16 by 15, that trade would have worked here had you known to set up that price. Maybe you missed that. Could have bought, excuse me, I'm really sorry. Could have bought at 16 here with a stop at 15. That would have worked. Gotten out at these highs or at this candle's high, something like that, around 18, 19. That would have been 2R, 3R. And then again here, 16 by 15, or at least on these, this low, stop at 15. And that should have worked again to exit at like 19 or a little bit higher. And it would have pulled back to 17, still been up in R. But that's when it really just consolidated nicely and then rallied. And this buying in here, this consolidation would have been buying off of this low. So let's look at the 12 o'clock candle. So at 12 o'clock, we were in here on the call. So run into this resistance, pulled back into this, and the call didn't actually lose that much value. So the call option at 12 o'clock and the call option at 12:50. So 12 o'clock, the low was 1725, and at 12:50, the low was 1710. So very little premium lost over that hour, even though the stock actually pulled back a little bit further from this low, 1736, down to this low at 1730. So it just pulled back another $5, but the option hardly moved. That's when it's looking a little bit stronger. The market makers don't want to give that value up as it pulls back because they've priced in something that it's going to continue on higher, so they don't want to give you a discount. That's what I think happens. There's probably some calculations going on with all the Greeks with with earnings coming up. But anyway, buying a low through here and the option would have been really clear to do, really obvious to do, especially if it comes back into this kind of a level where it paused here, rallied, came back to that area, paused, and then starts to bounce. Even had you waited, so let's say we're buying on this breakout at 1 o'clock. Sorry, went the wrong way there. So 1 o'clock would have been buying on this candle. Let's say you bought at 18. Well, you could have put a stop at 17 still, and that would have been right at the low. But it didn't even come back to that. A little more conservative would have been a little bit larger R on earnings week. So buy at 18 on the breakout, stop at 16. And that would have rallied nicely. That would have moved from 18 all the way up to 26. Easily could have gotten it out at 26 along here, maybe even 25. So 20, let's do 26. 26 minus 18 is 8 divided by 2 for a $200 risk, and that would have been 4R. So a little bit lower reward because you got a wire risk set up. But anyway, still a really good trade on options week. Just got to have a little bit larger amount in your account to spend $1,800 on a setup like this, and more than that if you were buying earlier at 15 or 16, and then trying to do another trade here going bullish. But anyway, a great opportunity to make some R's, even with it being earnings week and some key values here. Now with this consolidation, looks really similar to yesterday, just flat after hours. Not a lot going on here, not a lot going on here. So I think that's because it's earnings week, but this is a really nice place to have a bounce. So if we have a gap up, nice bullish retest, we could definitely continue on higher. If we have any bearishness, it's just going to look more like the same consolidation. And then, depending on the earnings gap, what we end up doing, if there is a gap. I mean, if we're just flat, I would kind of expect us to stay in this no man's land for a little bit longer. Just chop around a little bit, build up some momentum to go either direction. But the other thing about back here is this is when we had very bearish momentum. No squeeze. We did have a squeeze here, but we had a really bearish momentum. We're actually further bearish in the momentum than we were last time we were in this range. And so to me, it just says, there still may be a little more bearishness to go. Earnings should hopefully make this bounce. That's kind of what I'm expecting, and probably a lot of people are. So I would not be surprised to see some people buying here, and then earnings to open up flat. But we'll see. That is, let's see, today is Tuesday, so that's, I think we said it was Thursday after hours. So we'll be keeping an eye on it and see what happens, and what the plan can be going into Friday. All right. I hope you enjoyed this video. Sorry for the cough. I got over a little bit of a cold. Still dealing with cold and cough. But anyway, hope you enjoyed this video. This is Justin AMZN. Thanks.